let's have a quick review on coverages. Now, liability, technically, that's what the law requires. So you'll have access to this printout, but that's what the law requires. The law requires every vehicle to be insured just in case if we're responsible for an accident, we have enough coverages to cover the other party. So if they get pulled over, the officer is going to require proof of insurance. So they want to make sure that the car has liability coverages. If they're responsible for an accident, liability is going to cover the third party. So that means, let's say I hit someone, my policy is going to cover the other party's medical coverages and also to repair the vehicle, so property damage. If the vehicle does not have insurance, the DMV will suspend the registration. Now, normally it does take a couple months, but if we're educating the client, the goal is to always educate them that the DMV is going to give them maybe 30 days um, to get insurance. If not, the registration will be suspended within that time. If involved in an accident without insurance, the DMV could also suspend their license, their driver's license, and they'll suspend them either for a year or even more. So once again, there's a lot of consequences when someone is driving without insurance. Now, getting pulled over, getting a ticket is also going to cost them anywhere from $700 to $1,000 to cover the that fee, that fine. Okay. Now, for liability coverages, it covers $15,000 per person, $30,000 per accident, and $5,000 for property damage. Now, the way it works, if the if the if the other vehicle has damages exceeding the 5,000, remember the insurance company is only going to cover 5,000. If someone is injured, the insurance company is only going to cover $15,000 per person, up to $30,000 for the whole accident. Meaning, if there's three different passengers that are injured, the max that they're going to cover for the whole group is $30,000. Now, uninsured motorists. Uninsured motorists is technically a coverage that protects them from drivers that are driving without insurance. Now, there's 60%, I have 30% here, but we're using 50 to 60% of the drivers in the state of California are driving without insurance. So how does that work? So technically, if that uninsured driver hits a client, the client is going to be responsible to fix their damages, or they could take them to court. So it's very important for us to educate the client that the uninsured motorist is a coverage that's going to protect them from any uninsured driver. So if someone hits them without insurance, their own company is going to offer $15,000 for medical payments per person, $30,000 for the whole accident. I use the word family for their family, and $3,500 for damages to their vehicle. So it's very important to educate the client that in case of an accident, uninsured motorist protects them, okay, with coverages, not only medical coverages for them and their family, but also to fix their vehicle. And it offers $3,500 for property damage. So technically, they won't be responsible to fix the vehicle on their own. So that's very, very important. Now, it does not cover a hit and run, but once again, uninsured motorists is a medium package, and it's something that we highly recommend for clients because 60% of the drivers in the state of California are driving without insurance. Now, keep in mind the reason why there's a high percentage of drivers without insurance is simply because there's new cars, there's late payments that are potentially canceled policies, and of course, there's a category that I call drivers do not care. So these drivers do not care if they have insurance or not. So therefore, it doesn't really matter to them. So if your client is responsible and they care about their coverages and they care about their vehicle and their family, uninsured motorists may be a coverage that they may be interested. Once again, 50-60% of the drivers in the state of California are driving without insurance. So this is very, very important. Now, comprehensive and collision. Now, comprehensive and collision is what we call full coverage. Now, comprehensive and collision covers the value of the car, and it covers the value of the car based on the Kelley Blue Book. So comprehensive is technically vandalism, fire, and theft. So for any of these situations, the company will cover up to the value of the car or the cost to repair the vehicle. Now, collision is technically any impact. So if the car is involved in an accident, a hit and run, or the customer hits a pole, for example, or hits a property, collision will cover the value of the car or the value of the damages. The only thing that the customer is responsible for, and you have to make sure they understand this, is the deductible. Now, there's two deductibles that we usually offer. There's a deductible of 500 and there's the deductible of 1,000. Now, 500 deductible means that the insurance is going to be a little bit more, so the monthly payment is higher. 1,000 deductible, it offers a more affordable monthly payment. So it's very important for you guys to educate the client and to let them know that in case of an accident, they're going to be responsible for the first 500 or the first 1,000. Now, another thing that I want to talk about, and is very, very important for you guys to understand this, whenever you're reviewing coverages, whenever you're giving the client the information as far as the different coverages, it doesn't matter if it's liability, uninsured motorist, or comprehensive and collision, always use examples, always use real life examples. So what I use is I just use myself. I just tell them, look, imagine if I was to hit you, okay, my company would be responsible to cover the damages that I caused. Imagine if you were to hit me, your policy will cover the damages. So always use the example. I call it real life examples. Use those real life examples to give the customer a better idea, a better perspective as far as how the insurance company is going to work. Now, sometimes customers may not really understand how insurance companies work. So it's very important for you to give them an example so they can relate to. Okay, use an example of them hitting a pole, for example, or a hit and run. So all of these examples are very, very important, because if customers don't understand the situation, they're not going to understand the difference between the coverages. So once again, use real life examples.